Good day everyone, I'm Julieann Isip from BSBA FM22. So for our lesson for today, we have recent trends, derivatives, credit default swap, and financial institution. But first, I'm going to tell you some learnings about the previous lesson, which is the financial market, and I'm going to connect it with my report for today. So financial market aim to obtain profits without taking into account the aspect related to it. We have different kinds of financial markets such as physical asset market, financial asset market, spot market, future market, capital market, money market, the primary and the secondary market, and the public and the private market. Financial market is considered to be the most dynamic market and starter for globalization when it succeeded to become globally liberal. So after we proceed to our lesson, we have learning objectives to aim. And the first one is to explain what are the effects of change in terms of innovation in financial market. Second one is to understand the meaning of derivatives and credit default swap. And the third one is to give the purpose of financial institutions. Change is constant. There is nothing permanent except change. Including financial markets, they are experiencing change because of globalization. During the last decades, financial innovation increased financial mediation but led to lower transparency of financial markets, which is beyond undesirable. These changes are technological advances in computer and telecommunication, along with the globalization in banking and commerce that have led to deregulation, which is increased the competition throughout the world. Changing technology has transformed financial market. It has changed the way people pay for transactions. Sometimes they don't use cash anymore because they are relying on debit and credit card for their payments. Other people also use electronic commerce services such as PayPal and GCash to make online payments, and also they are into bitcoins. In an era of deregulation, the financial markets had created such complex products that even if we had known their details, nobody could fully understand their effects regarding risk. There are factors that complicate coordination. Number one, the different structures in nations' banking and securities industries. Number two, the trend toward financial services conglomerates which obscure the development in various market segments. And number three, the reluctance of individual countries to give up control over their national monetary policy. So we are proceeding now to derivatives. Derivatives only means it is a contract whose value is based on something else, or in other words, it is a security whose value is determined by or derived from the value of another asset. For example, Mang Nicolas is a farmer and he has 10 cows. He is planning to sell it a year from now. So, in order to raise them, he needs 500 pesos per cow. His total investment in raising them is 5,000 pesos. But he is worried what if mad cow disease occurs while raising them. In order to protect his business, he meets an investor's broker and he made a business contract with him. He said that he will sell it 1,000 pesos per cow after a year. So his total earnings is 10,000 pesos and his total profit is 5,000 pesos. The investor agrees because he thinks that disease doesn't like occur. So the derivatives there is the business contract he made with the investors with the future price and future time. Next one is credit default swap. Credit default swap is a contract that offers protection against the default of a particular security. For example, a bank wants to protect itself against one of its borrowers. The bank could enter into a credit default swap where it agrees regular payments into another financial institution. In return, the financial institution agrees to insure the bank against the losses that would occur if the borrower defaulted. Our next topic is financial institutions. A financial institution is a company engaged in the business of dealing with monetary and financial transactions such as deposit, loans, investments, and currency exchange. In the Philippines, the financial sector is pretty wide, and many banking and non-banking institutions offer a big services. Also here in the Philippines, we have 36 commercial banks, 492 rural banks, 57 thrift banks, 40 credit unions, and 6,000 plus non-banking institutions. So in order to direct and control them, the Bangko Sentral ng Pilipinas was established to regulate all the banks and also help these banks to informing the right policies. First kind of financial institution is investment banks. Investment banks serve a number of purposes in financial and investment world, including underwriting new stock issues, handling mergers and acquisition, and acting as a financial advisor. There are investment banks in the Philippines such as AB Capital Online.com Incorporation, Asian Alliance Investment Corporation, Asian Focus Group Incorporation, BPI Capital Corporation, and Eastgate Capital Partners Incorporation. Number 2 is commercial banks. A commercial bank is a financial institution that accepts deposits, offers checking account services, make various loans. Also, they offer basic financial services like certificate of deposits and savings account to individual and small businesses. A commercial banks is where most people do their bankings opposed to investment banks. There are also commercial banks in the Philippines such as BDO, Metro Bank, BPI, PNB, Security Bank, Union Bank, China Bank, Land Bank, DBP, and RCBP. Number 3 is Financial Service Corporation. A financial service corporation is a firm that offers a wide range of financial services, including investments, banking, brokerage operations, and commercial banking. It is also a financial organization owned and operated by its members and authorized to offer the following services exclusive to its members. Number 4 is credit unions. Credit unions are cooperative associations whose members are supposed to have a common bond such as being employees of the same firm. There are credit unions in the Philippines such as Banco de Oro, BPI, Union Bank, Western Union, East West Bank, Philippine National Bank, and HSBC Savings Bank. Number 5 is pension funds. Pension funds are retirement funds or retirement plans funded by corporation or government agencies for their employees and administered primarily by the banks or by the life insurance companies. To sum up my discussion, here is my conclusion. Financial innovation has the ability to grow the efficiency of certain transactions using financial instruments. Financial institutions encompass a broad range of business operation within financial services. So this is the end of my discussion. Thank you so much for listening, and I hope you have learned something in my discussion for today. Thank you.